Hello, today is Sunday, June 21st, 2026. Here is your daily signal. According to Fortune, markets reacted strongly to Kevin Warsh's first meeting as Federal Reserve Chair, where he was seen as anything but Trump's sock puppet. Warsh's background as a Fed governor during the global financial crisis, his emphasis on transparency and clear communication, and his influence on quantitative easing have long shaped how the central bank handles crises and public expectations. Key numbers from Bloomberg show that Warsh criticized the Fed's current stance, warning that failing to meet inflation targets could spike volatility. The Wall Street Journal reported on his meetings with BlackRock about possible rate hikes, and CNBC highlighted his push for more transparency to steady markets. In the short term, his hawkish comments have led to greater scrutiny of Fed signals and sharper moves in bond yields. Longer term, this might prompt institutional reform in Fed communications and even shift investor strategies as they hedge against rate changes. Political actors may use Warsh's criticism to advance their own agendas in congressional oversight and policy debates. Fortune notes the G7's new pledge to break China's dominance in rare earth elements by 2030, with leaders calling it a bold target at this year's summit. The G7 has ramped up discussions on vulnerabilities in supply chains, especially rare earths vital for manufacturing, while also focusing on AI governance for economic security. Recent geopolitical tensions with China have sparked collaboration between member nations including the US, UK, Germany, France, Italy, Japan, and Canada to secure their supply chains for rare earths and set standards for AI. Reuters reported on June 20 that the G7 launched a rare earth stockpiling initiative to hedge against supply disruptions. Politico shared news of a cross-border AI governance protocol focusing on standards and ethics, and the Financial Times confirmed a $5 billion public-private investment into rare earth diversification. Near-term, substantial investment outside China could trigger new mining partnerships. The G7's AI regulations are poised to influence global tech policy, while supply chain resilience may cut strategic risks for manufacturers. In the medium term, global alignment on AI standards may either spur international collaboration or boost competition with countries outside the G7, notably China. Next Big Future reports that SpaceX is set for unprecedented AI-driven revenue growth, projecting a jump from $1 billion in April to a $33 billion annual run rate by October 2026. Behind SpaceX's surge is the Starlink project and CEO Elon Musk's aggressive integration of AI, which has transformed the company into a dominant force in spaceflight and global broadband. Key stakeholders include Musk himself, investors like Fidelity and Alphabet, and regulatory agencies such as the FCC and NASA. On June 21, SpaceX announced Starlink's AI-powered routing now enables dynamic bandwidth allocation, boosting enterprise subscriptions by 16% in Q2 2026. Machine learning optimizations cut latency by 18%, unlocking $900 million in new government contracts this quarter. In the short term, these innovations are accelerating deployment of low Earth orbit satellite internet for critical sectors. Over the medium term, SpaceX's pace is putting pressure on telecom incumbents to adopt similar technologies or risk losing share while raising regulatory questions about data security and safety in autonomous networks. Now, onto the markets. International markets had mixed results, with Netherlands rising sharply by over 11% month-on-month and UAE jumping by 3.8% day-on-day, while Africa declined by 2.7% day-on-day. Notably, Taiwan surged over 22% month-on-month, and Japan was another standout with a day-on-day advance of 1.9%. Commodities mostly showed weakness. Gold eased 0.4% day-on-day, while silver and platinum fell 1.8% and 1.9% respectively, with copper advancing 0.6% and uranium adding 1.4% on stronger trends. U.S. oil moved higher by 0.6% day-on-day but dropped 25% over the month. Among favorites, AMD was a leading stock, jumping over 4.8% day-on-day, and ARM soared by 4.9% day-on-day and nearly doubled month-on-month, while Intel climbed more than 10.6% day-on-day. Alibaba and Adobe both slipped along with JD's 1.2% decline. In sectors, the S&P 500 saw a positive move of 0.8% day-on-day, and semiconductor ETFs soared 6.6% day-on-day, while healthcare and finance ETFs both retreated just under 0.9%. Transportation was strong, gaining 1.7% day-on-day, while agriculture sectors continued modest losses. That's it for today. You can find more news and details on our website. Goodbye.